I had to figure out, what the heck was going on. And I did. And one of the things that I found was that the market maker, because the market maker is not just playing Friday's expiration, it's one thing if they're playing just Friday expiration. If it's Apple and Apple is trading at, I'll just make up a number. Let's just say Apple is trading at $300 and there's a whole bunch of calls for Friday at $320, out of the money. But it's not until Friday. Well, the market maker can manipulate and play with the market on Tuesday, on Wednesday, on Thursday, into Friday. There's time to manipulate price up and down. Maybe there's a whole bunch of 290 puts in the other direction. So what the market maker can do is send price up by buying the stock, scaring the puts out so that they cancel their orders. They start getting out of their puts way before Friday, maybe even on Wednesday, some on Thursday. And then as soon as enough of them are gone, what does the market maker do? Sell their position, sell them to scare these call positions out. The market maker is an equal dream killer, equal opportunity dream killer. It'll kill the hopes and dreams of those calls out of the money and those puts out of the money, and it'll swing the market up and down. And that's what the market does throughout the week. But now that there's 0 days till expiration, now that that's all happening today on a Tuesday, you now have the swings on Tuesday. Does this make sense? So if, for instance, on the, now remember, the index follows the SPY. Okay, so let's just look at the SPY for a moment. Okay. And it's clear as a bell if you just look at what happened at the end of the day. Look at this. This is as clear as you could ever see. And you could tell that I'm not setting this up in advance because this is today. Okay, this is just today's market action at 3:00 in the afternoon, as if on cue. And you're going to just remember, I'm sorry, 1 o'clock. Actually, it's 1:15-ish. Just remember I said that 1:15. Okay. And also just remember as well that I said around 3:00, which happened around here. And that's when price went this way, 1:15 and 3. Just remember those 2 times, Eastern time. Okay, you got it locked in? Remember it? Because we're going to talk about time of day zones. It's going to blow your mind if you've never seen it. So just look at this. Why did the markets come down all the way to here, only to dead stop, got a little oversold, to then scream higher right up to here, to dead stop, and then fall off? Well, I can tell you one of the reasons why this happens throughout the day now, because of 0 days till expiration. So if I look right and I see 594, I guarantee you, if you looked at the options chain today, I guarantee you that there were a whole bunch of 594 and 593 and 592 puts expiring today. So when price started to come down like this, what the first thing that it's trying to do is to take out the calls. So if I go back a little bit, just watch. If I go back just a little, look at that. If I go back a little bit and I look to my right, I guarantee you that today there was a whole bunch of 599, 598 halves and 598s and maybe even 597s. I bet you there were a whole bunch of calls. So what happens is the market maker drives the price down, sells off as much as possible so that these call holders will bail out on their calls. Because let me ask you something. If you were sitting on a $600 call, and throughout the morning, 11:30, 12, 12:30, 1 o'clock, and now you get this. Price is now down $595.50. Are you going to hold on to that $600 call, that $599 call, that $598.50 call? Are you going to hold on to these calls that expire today? Remember, 0 days till expiration means it expires today. Are you going to hold on to those calls when you see it dropping like crazy? Right? Obviously, no, 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 no. So what happens? Well, investors close out their calls. They get out. They do not make money. They get out of them. And when a sufficient number of them have gotten out, the market maker starts looking at puts and goes, holy cow, we got 595s, 594s, and 593s, a whole ton of puts. Now that the calls are worked off, let's now equal dream killer, right? Let's kill the dreams and hopes of the put holders. So the market maker buys big lots of the SPY, does this on other stocks too. Apple, Nvidia, Microsoft, Amazon, Palantir, all the stocks. The market maker is playing this game. The market maker will buy the stock, buy it up. Why? Well, let me ask you the question again. If you were sitting on the 595 put, hoping that price would continue to go lower, and you're like, yeah, this is great, man. This is fantastic, right? If you were holding that 595 put, and then the market started to reverse and do this, now it's 1 o'clock, 1:30, 1:45, 2 o'clock in the afternoon, right? Look at what's going on here. 3 o'clock in the afternoon, price is already up here, 599. Are you going to hold on to your 595 put, yes or no? Right? Of course not. You're going to dump your puts as the market maker buys it up, right? Then just to find out, well, as soon as that's done, turned out there were some 598ers sitting around that still hadn't gotten out of their call. So what does the market maker do? Just for good measure, dump at the end of the day, because these are going to expire worthless if it does. If the market maker doesn't sell this off in the last half hour of the day, these calls will be in the money, which means the market maker either has to pay the money, right, in the money, or deliver the stock if they choose to exercise their right to take possession of the stock. Market maker doesn't want to do that, so he sells off just enough to get it to drift down here. Now, there's other things that move the markets: the VIX, the dollar, yields, analysts, macro data, geopolitical stuff, other market internals, of course. But I'm telling you, what I have discovered is that the market swings like this throughout the day because of the market maker. Not only that, there are specific times of day that it happens. And I went back and I studied this for over a year. I worked with Kevin, who's my coder and my friend and the director of tech for Trade With Me Now. We looked at it together, we coded it together, and we came up with one of the most amazing indicators. However, I am not going to show you that indicator just yet. I'm going to tell you the times of day, because as I said at the open, you can do this without indicators. I'm going to tell you what they are. Now, if you want to see them and see the indicators with the time of day zones, it's beautiful. It's the rocket ship. But my promise to you was to give it to you without. So think about my dilemma here. My first dilemma is that I'm paying too much for the butterflies, right? $1.50. If I got 5 of them, it's $750. I think it's going to be this, and then it swings. And so not only are they too much and I'm losing money, I'm in a position where, like I said before, if you remember the butterflies, I'm either finishing above it or below it. I'm not getting it in the net, which means it's either a wash or expire worthless, and I'm losing the $750. So I got to figure out a cheaper way, or better off. Is there a way I can get these butterflies for free, or even, dare I say, get paid for them, because there is profit that's made during the day, but I got to work a couple of different things out, number one. And number two, can I figure out when these swings are? And is there a way to predict the swings? Can I confirm that it's actually a swing? Like, is this a swing, or is it just a little bit of a move like that? No, this is the swing. So can I come up with rules, tools, indicators? Can I figure out when this market really shifts throughout the day? And can I get these flies cheaper? Okay, so setting you up here as best I can. So the first thing I'm going to show you is the time of day zone. So I went back and I looked every single day on the SPY, on the IWM, on the Qs, on Apple, on everything, because it looked like there were very specific time of days when I would see this crazy swing all the time. In fact, I'll show you. Let me change this back to 3 minutes so that I don't have to go back. I'm going to just stick with this 5-minute chart right here of the S&P 500. So as you look at this chart here, I just want to tell you what you're looking at here. Okay. There's a couple of indicators, but I'm not even going to mention them. I just didn't want to take every single thing off. So the only thing I want you to focus on is that these are regular candles right here, green and red. If price closes before the previous candle, it's red. If price closes above the previous candle, it's green. If it opens up and closes down, like open, close, it's solid. If it opens here and closes up here, it's hollow. Okay, this is just straight up regular candles. Okay, that's number one. Number two, in this particular workspace that you're looking at, I've got 2 moving averages only right here. On the 5-minute chart, I've got the 5 and the 10. Every brokerage platform has them. And they are EMAs, meaning exponential moving averages. What does that mean? It just means that these type of moving averages versus the broad moving average or the simple moving average, they just give more value, more emphasis towards the shorter time frames. They're a little bit more reactive. That's all. So I've got the 5 and the 10 EMA on a 5-minute SPY. Over here, I'm using SPX X. And I've got 2 moving averages here, but because it's a 3-minute chart on SPX, I'm using just the 3 and the 5-minute. The 3 and the 5 here, and the 5 and the 10. And these are also EMA. This is the RSI. You don't even have to look at that. And these are just high-low indicators. These bars are called the 1, 2, 3. I mean, I could remove them too. I guess I'll just remove them so they're not so there's not a distraction. Really, I'm literally going to just show you without any indicator. Again, the only thing that you're seeing here are straight up candles and 2 moving averages that you get on any broker platform. Okay, the 5 and the 10 and the 3 and the 5. So what I want to show you is the time of day zones that I discovered. What I noticed is that the market initially hiccups every single day practically. And you can write these down, okay? At 9:40 a.m. and I'm giving you all Eastern time, okay? I'm going to go a little thicker so you can see better. I'll draw in yellow because I think it might be a little easier to see as well. There, better? 9:40 a.m. Eastern time. Every single day, wherever the market, if the market is moving up, this is the pre-market here, okay? It opens at 9:30. It moves up, boom, boom, boom. And look at this. Look at the time of day right here. This is today. Today. See that candle right there? Okay. So this candle, and I guarantee you've never looked at the markets this way before. Right here. Bang. The wick. What does the wick mean? It means price came all the way up to the top and then it closed down here. And then it went from here to here and here to here and here to here, here to 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 here, boom. So basically reversing course and coming down, right? So interesting. The very first move of the day, this little move right here is the 9:40 move. And I noticed that this happens almost every single day. The second thing that I noticed is that one of the major shifts of the morning, and by the way, that's tradable, but we do not use it for convert the vert because it's too quick. We wait for the next one. So the first tradable shift is what I refer to as the 10 a.m. shift. Here's 10 o'clock. Get on this. Let's get to it on the SPX here too. So we can line these up at the same exact time. Okay. Right. Today's the 12th. Yes. Right. Right here. Yeah. So you get this little jiggy, boom, boom. What time is that? 9:40. And on the 5 minute, it's not as recognizable. But let me just pull this up. You see a little better there. Okay, so 9:40. Look, 9:42, 9:40, right here. So boom, 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 9:40, boop, a little bit of a move. And then it settles, comes up like this. This is like at 9:45-ish. So this is like the first time of day zone right in here. And what I'm looking for is a reversal at 10 o'clock. 10 o'clock happens right here. I'm try to draw straight. I'm going to draw 10 o'clock right here. It's pretty much, it's, I'm sorry about the squiggle line. And like when I say 10 o'clock shift, it could happen at 9:55. It could happen at 10:05. It could happen at 10:10 or what, right? But it's called a time of day zone. But you can see it, right? Boom, boom, boom. And then down she goes. That's called the 10 o'clock shift. This is on a 5 minute and this is on a 3 minute. And here it is, right here. I'm going to get into what to look for and what the strategy is. I just want to show you the zones first. Okay. I'm sorry. I lined this particular one up incorrectly. That's the 10 o'clock right there. Okay. Just put my cursor on it here. Yeah. See 10 o'clock right there. Where that yellow line is, that's the 10 o'clock time of day zone. And it goes all the way to 10:30, 10:35, 10:40 when you get the next zone. So really, zone number 1 is kind of like right here. That's the 10 o'clock shift. Okay. The next shift is called the 10:40. And sometimes it's just a pullback. Sometimes it's a shift. We'll see. In this particular instance, it was a little bit of a move, but not much. The next one is the 11 o'clock time of day zone. Sometimes it moves. Sometimes it doesn't. And then you get that final move into lunch. And the lunch is what we refer to as, the lunch box. So this is right here. I'll just get this together here. Starts at about 11:50 when it begins to chop. 11:40, 11:50. Right there, 11:40. And look at this. Chop, 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 chop. Really not going anywhere. Kind of trading inside of a box. We call this the lunch box. And the first trade of the afternoon is what we refer to as the out of lunch box trade. So what happens is as soon as it becomes 12:30, you're going to see it when I put the indicators on. Right at 12:30, you will see that there's a zone here called the out of the lunch box zone. If price starts to move outside of that time of day zone, this box, one way or the other, that's the trade. So you can look at the box. We draw the high. I draw the low through 12:30, and I just wait for it to break. And look what it does. Moving average cross, which we're going to get into in a minute. And there's the move. That's the move. So this is called an out of the lunch box time of day zone. The next time of day zone is at 1:15. I'm not just doing it based on this chart. I'm telling you what the actual zones are. And then I'm going to write them out for you so you have it. So look at this. This is 1 o'clock. This is 1:10. And this is 1:15 right here. And look at this. Comes down. Look at this. Look at the moving average cross. You see where they cross? Where do they cross? Anybody can tell where they cross? Look at this. At 1:15, 1:12, 1:15, the 3 and the 5 moving average crosses right there. And that is a time of day zone, which again, you'll see the indicator kind of lays it right here. There's another one that comes at 2:30, and then there's the 3 o'clock shift that happens. Sometimes it's a few minutes before, but you can see right up, straight up here. Here's 3 o'clock. It comes up, It consolidates for a little bit. It breaks the box. There's the 3 o'clock shift. Boom. That's the 3 p.m. shift. Okay, that was today. Let me show you yesterday, just so you see that I'm not, making up one particular day. This was today. Okay, let's go to yesterday and just look at what the shifts were yesterday. Now, to be fair, not every day does every shift show up. There are 9 shifts. But if you know when they are and then have a strategy and have rules to follow, if I see this, 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 and this, and there's a time of day, that's pretty good guarantee that I've got a shift in price. And that's when we're going to put on our convert the vert strategy. If there's no shift at that time of day, or the rules don't line up, and they're really simple rules, I'm going to give you, without showing you any indicators, without any checklists or anything, I'm just going to literally do this for you. 4, 3, 2, 1. If you can count backwards from 4 and put up 2 charts here with no indicators, you will learn convert the vert. Now I'm going to show it to you that simply. This was yesterday. And you can see the shift here. This happened at 1:21, not at 1:15, 6 minutes later. But if you were here at 1:15, waiting, and then you got the rules of price action that I'm going to share with you, you would have seen, yep, this is the 1:15 shift. And that's all you need for convert the vert. You need no more than 7 to a 10-point move right here to put on convert the vert. Make money and have these lottery tickets that pay off like you just cannot imagine. And then the ability to scale. So here you go. Here's the 940 buckle. That first little jig right here. This is yesterday. I showed you today. So now I'm showing you, the 11th. Here's 942. Here's 940. You get a little jig, jig. And then right here, this is 950. Happens a little early. What happens? Down she goes. Remember I said there was a 1040 shift? That happens here. Sometimes it shows up at 1030. Sometimes it's 1040. There it is. I'm just waiting for clues. I know it's coming. There it is. There's the cross. Bang. Pull back. That's okay. Great. I told you there was an 11 o'clock shift. Didn't have one today. Had one yesterday. At what time? Right here, where you did not make a higher. You made a higher high here, and then you broke through down here. Look at this move. This is going from about 60.17 all the way down. This is more than a 10-point move from there to there. Let's just keep looking just a little bit more. And then you can see, remember the lunchbox? Remember I told you, now the reason why we call it the lunchbox is because that's when a lot of traders go to lunch. They actually take lunch. And so what happens? It just chops here. So we tell people, stay out of lunch. Wait. And if I draw a box, the box during that lunch hour right here, all I'm waiting for is what? A break either this way or this way. Look at the out of the lunchbox trade. I'm sure you've never looked at the markets this way before. I guarantee it. And look at the move. Look at this move. Right out of lunch. Here's 1230 is right there. So you've got this box here. Sorry. And then the break, there's your pullback, bang, there's your move. As I said, 115, there it is. There's the 115, happened at 124. We can go backwards. I guess I'll just go to the beginning. I'll just show you one more. I'll show you one more time of day zone, and then I'm going to show you the actual strategy. Okay, so this is where the market opens. Here's where the market opens. Look at this. There's that 940 jig right there, 940. And what happens? Here's the 10 o'clock. Here's the 10 o'clock time zone right here. Boom. Happened a little before, but that's okay. Look at this. Moving average cross happens about 5 minutes before, and up she goes. Boom, 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 boom. You have a little reversal. What time is that reversal? 11 o'clock. Down she goes. Then you got the 11:30 into the lunchbox. That's another trade right into lunch. And I'm gonna draw out the actual time of day zone so that you can see it. Okay. And then you've got lunchbox. Right. So here's your lunchbox. Here's 11. It's kind of chop, 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 chop. Which way does this go? This looks like it's breaking to the upside, and it does. Then you get what? So here's 1 o'clock. Here's 1:15. Right. Sorry about the curve. That, my friends, is about 1:15 right here on this moving average cross to the downside. Let me just show you. You got the 2:30 reversal. This will be the last day I show, okay? So here's 2:30. 2:30 is right here. There's your signal. Bang. This is the 3 o'clock time zone right here. Happened a little late, but as it peaked, got up here, moving average cross, boom. And remember, what we're looking for is, as I'm going to show you, what I'm looking for is a 7 to 10 point zone, a 7 to 10 point zone, so that I can put these butterflies on. Where that not only do they make money, and not only are they going to be free plus money, lock in the money, but I'm going to be able to let them cash settle, close into the end of the day like a lottery ticket with no need to be there to close, walk away, and cash it out in the morning. Really cool. So I found these time of day zones. And in fact, I guess what I could do is give them to you right now. Okay. And you could take a screenshot of this if you like. Okay. So you have the first one is the 9:41, but that's not the one that we trade right off the bat. The first tradable one is at 10 a.m., the 10 o'clock shift. The next one is 10:40, followed by 11. Sometimes the 11 o'clock will take you in that direction right into the lunchbox. And sometimes there's another move at 11:30 that takes you right into lunch. Then you've got the lunchbox, which is like 12 till 12:40-ish or so. We don't really trade that, but the next tradable move is the out of the lunchbox trade, which typically happens somewhere around from 12:40 to 1, which I showed you as it breaks out of the box. You've got that 1:15 trade, which is the first reversal of the afternoon. There's a 2 o'clock trade. Sometimes it's 2:30 if it's a little late. And the final trade of the day is the 3 o'clock shift. And sometimes it's a little early, 3 p.m. These are all Eastern time. 10 o'clock, 10:40, 11, 11:30 into lunch. The 11:40 shift out of the lunchbox. The 1:15, really reliable. These are the most reliable right here, almost every single day. Then you usually get some move into lunch. The out of the lunchbox trade is awesome. And then if you don't see it at 2, you'll see it at 2:30. And then usually there's that 3 o'clock reversal as the market makers go to work to wipe out calls and puts. These happen every single day. Now, sometimes you might not see an 11 o'clock. Sometimes the 11:30 happens at 11:40. But when you're waiting for it, waiting, I'm waiting for the move. It should have happened here. I'm still waiting. And then you start to get the signals, which I'm going to show you in a few minutes, and the strategy, you know what to do. So those are the time of day zones. Now, I still have an issue. One of the issues that I had was that I was using a margin account. So I couldn't just buy a vertical and then sell it because that would be considered a day trade. And you're only allowed, 4 day trades in a 5-day period or 3 in a 5-day, and then they give you a warning, whatever it is, right? You can't, that would not work. So I can't just buy a vertical and then sell the vertical because of the day trade problem because I had a margin account. Couldn't do that. But and there was a low probability of me just throwing a butterfly on in the morning and just letting it go, or putting a vertical on in the morning. Hey, let's just put some kind of vertical right here and just let it cash settle. So I knew that wasn't going to work. So how could I place a trade for free or not cost anything and not get dinged with the day trading on a margin account? I want to have zero or almost zero risk. And when it closes at the end of the day, I want that big lotto ticket effect at the end of the day, like I was getting from those butterflies. And because it's cash settle, bang, 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 I can literally just walk away. How do I do that? So if I could come up with a strategy on SPX that would allow me to put on a trade where I could make money in the trade, but not have it get dinged with a day trade, lock in that profit, lock it in on the shift using the time of day zones. If I could do that and then be able to walk away and have it cash settle and make anywhere from $500 to $500 just for one, quantity one, holy cow, I would really have something. So I figured it out. I figured out a way. I came up with a way where I could buy a debit spread. I'm going to draw it like this, where I could buy a debit spread in either direction, either a put debit spread going this way on this shift, or a call, this is puts, or a call debit spread on that shift. This is the 10 a.m. Look, 10 a.m. shift. This is the 1:15. Look at this. 10 a.m. and 1:15. The two time of day zones that I told you were the most reliable. And the out of the lunchbox one, of course, but really cool, right? So how could I, this is calls here. So this is the way to do it. Put on a debit spread. That's what this is right here, right? And then once price gets in the money, immediately sell a credit spread right above it. And if I could sell the credit spread for less money than it cost me for the debit spread, I would make an immediate profit. I could keep these open. I wouldn't have to close them, and it could just cash settle. So as an example, if I buy the credit spread, let's just say for $200, $2, right? Out of the money. I'm going to buy it here on the shift. Let me draw this. This is what we call the holy shift moment. When you realize there's a shift, everything is in alignment, everything confirms, and you get it here. And which one do I get? I get the one right above it, which I'll explain in a couple of minutes. Right? So this is an out of the money, and I know I'm showing it to you on SPY. It'll actually be here on SPX. Maybe I should do it over there just so you don't get confused. Boom, boom, boom. And yellow is the holy shift. And we're like, that's the shift, right? Oh my God, I see it. Time of day and all of the indicators I'm going to show you that are right, not indicators, but price action that confirms it is a shift. What if I spent $2, just one contract, buy this debit spread here? And then as soon as price moves into the money here, small move, just a couple of dollars. I'm only going to buy it like $1 or $1.50 out of the money. So it only needs to move like $2 or $2.50, which is nothing, especially if I guess the shift right. And as soon as it gets in the money, I'm going to put this on, which is the credit spread, sharing these two strikes. And if I could put the credit spread on for just say, I'm going to just show this as an example, 240, price gets to like right here. It doesn't even have to get up here. It just has to be in the money over here. If I got 240 for the credit spread and I paid $2 for the debit spread, what's the difference? Well, in my account, it shows $40. And I've got two open trades, don't I? I haven't closed the trade. In fact, I'm not going to. Now, remember what I said about butterflies? Well, what happens, right? You guys remember the what happens if on butterflies? Watch. That's why I gave you the primer. Boom, 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 right? I did the debit spread first. I did the credit spread second. I just made $40. So you tell me, what happens if after I do this, price reverses and somehow ends up down here? What happens to my butterfly? You guys remember, right? If these were calls, a call butterfly, and price finishes below the strike, what happens? It's 100% out of the money, right? It's not a wash. It's 100% out of the money. All these calls expire worthless. So what happens to the $40, Michael? I keep it. Nothing happens to it. What happens if price finishes up here? This is a wash, right? Remember I showed you? This one gets paid this one gets paid that, -2, It's a wash, right? If a butterfly finishes 100% in the money, it balances out and it is a wash. So you make nothing. So what happens to the $40, Mike? I get to keep it. So in other words, if I do convert the vertical here, and I made the $40 and I close my computer and walk away, there's only two things that can happen. The first thing that could happen is that I made $40 and I get to keep it. And there's no commission at the end of the day. That's scenario number one, is that I get to keep up $40. Scenario number two is that at the end of the day, there's a chance that price might actually finish somewhere inside the net, which means with a 5-wide butterfly on SPX, now there you can only do 5 wides. You can do more than 5, but you can't do 1s and 2s and 3 wides. It's only the minimum you can do, I should say, is 5 wide. Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comment section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.